Welcome, ladies and gentlemen, to Commodity TV in a new edition of our online interview series. It's time for an update with Revival Gold, and we have here Hugh Agro, the CEO. Hey, good morning to Toronto. How are you, Hugh?
Hello, Jochen. It's really good to see you. You look very healthy, and it looks like things are going well there with you and Commodity TV. Good to be
Yeah,
with you.
thank you very much. Yeah, all is fine here so far, but the summer is back and the summer is here, has started, and yeah, everything is good so far. But also the gold price is fantastic. We are scratching again $3,400, and I must say we are following your company quite several years, and you guys are doing a terrific job. Thanks for that. And of course, I'm also a shareholder in your company. So I think it would be good to get a little bit of an update because you are starting your field work and you provided also an operational update. So I would like to start with the Mercur gold project in Utah. So what's going on here for the next months?
Well, it's going to be a busy season for the team. We're getting ramped up for a drill program. Planning to do about 13,000 meters of drilling at Mercur. We've got a drill rig planned to be on site by the end of this month, June, and then we're looking to get another in July. And we'll move to Beartrack-Arnett, but we're looking to drill there as well towards the end of this year. It's a really good time to be exploring in the United States. As you know, we've got a very favorable and supportive regime in place, and we want to take full advantage of that.
Yeah, absolutely. So what I saw is also quite interesting, the archaeological surveying, which you are doing at Mercur. Is there a big reason for that, or do you have to do it anyway?
So the first step we got into this spring was to expand our drill permitting. We've got about five, now six drill permits in place, and we wanted to expand on those. So we got in there as soon as the snow left with archaeological survey work, and that's to clear the areas we want to put drill pads and do drilling. And by archaeology, we're talking about this is, of course, a historic mining site going back. To the 1870s. So we're talking about old picks and shovels and these kinds of things that is the archaeological activity, and it's about recording and documenting anything that might be there. Nothing historic in the sense of native or ancient artifacts. So we're not talking about anything like that, and
Mhm.
nothing that's got in the way of our drill programs or activities. And the other thing is we want to start that broader survey work so that we can get ready for mine permit. And I know you want us to move as quickly as possible with that.
Yes.
So so we're not skipping a beat. It's not costing us a ton of money to do that work, so we want to do that now and get that moving. So we're in great shape. In fact, when I was down in Utah a couple of weeks ago, we were in to see the Department of Oil, Gas, and Mining, where permitting takes place in Utah, and boy, they were jumping over themselves to help us with our permitting activities. We had one gal had to head back into the office and find a notary and find some documents for us and get us all signed up. And so that put us ahead of schedule and ready to go for the drilling.
Okay, super. So drilling on the one hand is a really fantastic thing to do, but as said, I would love to see you more on the, let's say, speed line here to go or to move that into the production theme here. What is about the PFS and the FS? Can you do that together?
Well, I was presenting the other day, Jochen, and I was reminding myself, thinking of the last time that I presented to this group in New York City. It had been about 2.5 years ago. The price of gold was half where we are today, and so if you think about that leverage, as much as we're moving as quickly as possible to go into production and see that in cash flow for investors. The value of the projects just skyrocketing in this gold price environment. In fact, if we look at just Mercur, the NPV of the project goes from $300 million at 2175 gold to $750 million at $3,000 gold. And company wide, our NAV goes to $1.2 billion. And this is for a market cap company. Even though we were up since you and I last spoke, we're still only about a $75 million US market cap. So $1.2 billion worth of NAV, $75 million worth of market cap. And that's, before we talk about the underlying infrastructure value. So ton of upside in the stock, just going up in terms of the underlying value in the company as the gold price goes up. And we are on private ground with our Mercur project, and that's why we can move relatively quickly into production. We just had one of our neighboring projects in Utah, a uranium project, permitted. So we're seeing a lot of support for permitting, not just in terms of our drill aspects, but in terms of more broadly hard rock mining in the state. And so we'll move as quickly as humanly possible here. As I said, archaeological work is underway. We've got to do a drill program for conversion of inferred to measured indicated, but we're also in a Carlin type system here. These are big gold systems, so we're expecting to find a lot more gold in this system as we progress. We'll do some metallurgical testing to de-risk on the metallurgy. It's going to be a really big year, and in terms of value catalyst, really important to the underlying value of the company as we progress these steps.
Absolutely. Yeah, I saw that you have like a 2-year permitting time frame. Has that already started? Are we already into those 2 years?
Yeah, well, so we'll formally commence permitting in early 26. So we should be in a position to turn a shovel by the end of 27, early 28 with the Mercur project. And of course, Beartrack-Arnett will continue moving along. It's on federal land. We've got permitting preparations underway there. And of course, we've got a lot more drilling we can do there. It's another 3.5 kilometers of strike, 5 kilometers of strike, I should say, to the system there. So lots of value to continue to add to the story. There's a lot of there's a lot of interest in the gold space right now. You're seeing a number of companies. You're seeing a lot of generalist attention and big financings take place. I can tell you there's a lot going on beneath the surface in terms of corporate, financial, strategic interest in Revival Gold. So we've also got a busy program with that.
Okay. So you said already a lot of interest. That would be one of my next questions here, of course, because I think you're totally undervalued on the
Yep.
one hand. On the other hand, you would have then two mines in the US, in the heart of the US, which would be outstanding with low costs, low AISC, so everything on the right side. Why have you not yet been bought or have a real large strategic coming in, stuff like this? Because everybody is now buying and looking and doing things. Yeah, I mean, we just saw Agnico Eagle with Fury, for example. Yeah, I mean, that for me, it was a question of time when they come into that. Yeah, it makes sense. So let's say you have also that interest.
Yeah, yeah. As a matter of fact, we just, as you know, we brought Dundee Corporation in for a strategic stake. I mean, obviously, uh, really smart investors in the space, mine builders, company makers, and they have a lot of ambition for us. But we've been careful about how we bring folks in and what we do. A lot of things in these arrangements. Can trip you up down the road. So we're pretty careful about that. We've got strong institutional ownership, long-term investors that have been with the company. They've watched us go from zero to now 6 million ounces of gold, 160,000 ounces of target production in two projects, big geological systems, but without the overhang of constraints to how we fund in the future, who we do transactions with in the future, how we continue to build the business. And so we're really careful about those things, Jochen. And sometimes it's a case of short-term gain for long-term pain with some of these finances that are taking place. But I can tell you, there's a lot of interest in what we're doing. We've already brought in Dundee Corp. We've got strong support from our key institutional shareholders, and I think this is going to continue to build on itself. We're really, really excited about having assets in the US right now. I think I cannot underestimate how valuable that is. You're watching Barrick,
Yep.
frustrated with reserve replacement and going into copper, and frustrated with finding projects and going to Pakistan with the
Yeah.
geopolitical risk associated with that.
I would never ever have done that. Yeah.
Well,
Yeah.
look, I mean, I think, listen, we're not in those shoes. I think we have to be conscious of the fact that when you're a big company like that and you've got you're you're struggling in North America to grow, you got to look elsewhere. And that's where, companies like Revival Gold, I think, can offer a lot more leverage, a lot more upside, and a lot more geopolitical safety in terms of, an investment.
Okay. So which one would be faster in production, Mercur or Beartrack?
Well, most certainly, Mercur's at the front of the queue, and
Yeah.
Beartrack's moving along, and continuing to grow. We're already at 4.6 million ounces there. I think the reason why there's a lot of interest in that project from corporates is because our peers can see that it wouldn't be too much of a stretch, to double the strike of the deposit. And double the strike, you could easily see how that might double the resource. It's that impressive.
Okay, super. Let's move shortly to Beartrack-Arnett because that was your, let's call it, starting project, and I still rate it extremely highly. You had a super PFS in 2023, so that's now already 1.5, 2 years ago. Um, what is next step here? When will we see a feasibility study, and what can we expect, let's say, to move it to a production decision?
Yeah. Well, in this environment, we want to be doing more exploration, and so that's why we've got a drill rig proposed for later this year to come in and continue to build on that underground deposit there. The leverage is incredible. You'll be finding gold at Beartrack-Arnett for less than $10 an ounce in the ground, and I think it'll continue to grow like that. So the nice thing about having the two projects is we can focus moving in Mercur into production while we continue to grow the resource at Beartrack-Arnett. And a lot of companies like ours, and you've seen this with some of the companies that you've followed very closely, Jochen, they don't have organic growth. They wind up having to buy something, and it's not very synergistic for shareholders. Whereas we've got these big property positions with lots of potential to continue to expand. And that's precisely the kind of thing that institutional investors who are in our stock, like Donald Smith, Libra Securities, Sun Valley Gold, US Global, they understand that. And that's why they're invested in Revival Gold. And I think for the generalist investors, as they come into the space, they're just going to follow the smart money, right? They're going to follow the due diligence that the groups like Dundee Corporation have done on us to see that our team and our assets and our capability to deliver stands head and shoulders above many, many of our peers. And that's going to bode well for us in the future. And if your prediction, Jochen, about the gold price is right, we
It is right, I can
absolutely
assure you.
we absolutely want to take care on potential future dilution and how we optimize the value for our shareholders. So we're right in that moment right now of building value and minimizing the dilutive effects of future funding plans.
Okay. You have almost 2.2 million ounces in the inferred category. What are your plans to bring that into M&I?
It's actually a little bit more than that, about 3.5 million ounces of inferred. So just think about this. So we've got about 2.5 million ounces in mining plans for development. That's our underlying NAV. So that's that $500 million going to $1.2 billion that I spoke about
Yeah.
earlier. But beyond that, we've got, as you say, we've got another 3.5 million ounces of inferred. That's before we get to exploration. So absolutely, we want to be working at bringing that 3.5 million ounces into mine plans and into NAV, and we'll work on that starting with the drilling that we do this year at Beartrack-Arnett. Our
Mhm.
intention there is to build more critical mass to the underground. We've already got almost 1 million ounces of underground material there, but we want to build more critical mass and then move that to a PEA.
Okay. So that
So
also Yeah, sorry?
I was just going to say, so that's phase three, right? Phase one for us, Mercur, 100,000 ounces a year. Phase
Yeah.
two, Beartrack-Arnett heap leach, takes us up to 160,000 ounces a year.
Yeah.
Phase three, we go with the underground, building plans around that. We think that'll take us over 250,000 ounces a year from those three phases, perhaps as much as 300,000 ounces. We've got to do the work. Starts with the drilling.
Absolutely, and at low cost. That's important.
I listen, that drilling in the United States is not cheap, it's expensive, but when you've got a really good deposit and you've got an efficient team, you can add ounces, at less than $10 an ounce in the ground, and think about that leverage for investors, right? It's pretty impressive.
Yeah. I meant also the AISC which are proposed.
Ah, yes. Thank you.
That's important. You know, it's always lovely to produce, you make your revenue, but I love to see what is under the line. It
Yeah.
has to be deep black.
Well, Jochen, but this is where being on sites that have been, proven to produce effectively and efficiently in the past is so important. We're seeing some companies struggle with these developments and with costs. Uh, when they're on greenfield sites, it's more complicated. There's geotechnical data that can come into play and cause problems. There's temperature issues that can cause problems. There's elevation that can cause problems for these startups. We don't have any of that. We're in good locations. And Mercur, we're an hour outside of the town of Salt Lake City. And I'd love to get you out there, maybe during ski season sometime in your Lederhosen, and you come and visit us.
I'm not skiing.
But
Lederhosen is
but
fine.
it's very hospitable. Even for our European friends, you'd find this very, very hospitable.
Super. One question also about money. Are you financed to do all that stuff this year?
We're working on putting our funding structures in place. As I say, lots of interest in that. We're working on optimizing for future funding plans. We got about 3 million to continue to progress things and get our drilling started. But we will be doing some sort of a financing or strategic transaction before the year end for sure.
Okay, super.
Yeah, watch
Perfect.
this space. It's heating up.
Yeah, absolutely. So one last question, which I always love to hear. What's your view on the gold price, gold market? How do you see it? Because you are closer to the US and Canada, of course. What's the mood there?
So, Jochen, what we're seeing is that the majors haven't really had a supply response, and we're seeing that in terms of the lack of exploration investment, the lack of sustaining capital investment to push back pits, even the reserves being done at $1,500 an ounce is indicative of that conservative nature of the majors and intermediates. And, I would point out that we're not seeing any forward sales of gold, hedging, that sort of thing. So there really has not been a supply response from the majors. And I think that bodes well for the long-term gold price. When you don't have supply coming onto the market, that has an impact on
Absolutely.
price.
And the central banks are buying like it's a winter and summer sale together. It's crazy. Yeah, really unbelievable.
Well, we just saw gold surpass the euro in terms of central bank
Yes,
reserves.
yes.
So
Yeah,
absolutely.
absolutely. And you know why there are no forward sales? Because they all know my prognosis.
Well, it also speaks to the fact that the balance sheets on these bigger companies are in much better
Absolutely.
shape, so they don't feel an urgent need to forward sell the metal and bring metal into the spot market
Yeah,
artificially.
definitely. Super. Hugh, that was great update. Thank you very much for that. And yeah, very simple. We wish you well. Let the drills turn and feed us with good drill results, of course. And we look forward then to hopefully a cool and great strategic partner that would be always useful, I would say. And yeah, good luck for that. Thank you very much.
Thanks,
Thank you.
Jochen.
Bye-bye.
Bye-bye.
Yeah, ladies and gentlemen, that was Hugh Agro, the CEO of Revival Gold, and you heard it. Things are really moving well. The company has done a terrific job with the Mercur Gold project, but also Beartrack-Arnett. And to be honest, I think those two projects will be by, let's call it 2028 until 2030. Both should be in production. This is what I really hope for. If it goes a little bit faster, I would be even more happy, because I think those two projects in the heart of the US gold for the US market, this is exactly what you want. No tariffs, nothing, no hassle, no trouble. That's exactly what you want to. And yeah, the company is progressing well here, and we look forward to the next drill results. They have the money to do so. That's also very important. And my feeling is there will be soon here a strategic partner coming in, because this is really overdue, that somebody steps into that wonderful company. Honestly, I'm also wondering why they are not yet taken over, but this is another story, because there is so much value into it. I would suggest you really consider that wonderful company, Revival Gold. Have a look at it. It's still way too cheap. Our first price target is $1 Canadian, 25 to 150. We see that latest for next year, but we think that could happen even faster. And so check it out. Thanks for watching us, and bye bye from Switzerland.